Happy Thursday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, December 28th, 2023. As always, we'll start with the executive summary from today's leadoff morning note. If you would like the analysis supporting these conclusions, as well as what to do about them in your portfolio, you need to be a client of 42 Macro. So number one, this morning's jobless claims figures affirmed our prior belief of a low to middling probability of a near-term recession in the U.S. economy. Assessing the probability of a near-term recession, we must also look to the 42 Macro Fab 5 recession signaling indicators. In totality, those time series suggest a low probability of a near-term recession in the U.S. economy. Number two, investors that are making money alongside us in the current Goldilocks top-down market regime must be on high alert for data that increase the probability of a no or hard landing scenarios, because that would come at the expense of the soft landing currently being priced into asset markets. And then number three, remember, it is not critical to determine whether the economy soft, hard, or no lands. What matters is being positioned appropriately to make and save money throughout the entire landing deliberation process. We have found that our KISS portfolio construction process offers the best solution for retail and RIA investors on Team 42 to accomplish that objective. We have found that orienting our discretionary market calls to the top-down market regime and supplementing that with our macro weather model signals and qualitative research to assess how long the current regime may last offers the best solution for institutional investors on Team 42 to accomplish that objective. Every investor's 2024 New Year's resolution should be to get out of the business of positioning for your predictions and get into the business of positioning for profits instead. Your goal is to make and save money in financial markets, not to be right on your investment thesis. Get rid of that nonsense. All right, let's move over to my 42 macro dashboard here. We'll start with as always, with our signals from our trading range signals from our friends over at Longbow. Getting towards the bottom end of the range on the 10-year Treasury yield here. You got about downside to about 3.75, right around 3.78, 3.79 currently there. So be aware of that. Obviously, Bloomberg's out with the story. This is the best 2-month run in global bonds we've seen in the history of the data set going back to 1990. So probably not the best spot to be chasing bonds here, but obviously the trend continues to be your friend, obviously in the fixed income markets, in so much that the trend continues to be your friend in the equity markets as well. So and then transitioning to our 42 macro aware community here, we're getting a question from one of our subscribers is there a liquidity chart in the around the horn? Is there some other chart that shows the easing of monetary policy? So the yes and yes is the answer to that. So obviously every week in our around the horn, in the systematic portion of that presentation, we obviously feature our 42 macro net liquidity model, which is the Fed balance sheet minus the Treasury general account and RRP balance that's become so popular on Global Wall Street. We feature that in our weather model as well as a feature of the weather model, as well as our global liquidity proxy, which is the global central bank balance sheet plus global broad money supply plus global FX reserves minus gold. So both of those indicators are two of the features in our proprietary micro weather model that are contributing to our rolling 3-month projections for the various asset classes. So that's one spot to see liquidity trends and how they're ultimately impacting asset markets on a forward return projection perspective. And then we also have our global liquidity monitor, which we track trends across growth, inflation, and policy across all the major economies in the world. We have individual liquidity proxies built for each of those major economies, which feed into our global liquidity proxy. So you can track trends in liquidity there. So that's featured every week in our Around the Horn. That's featured every day, 5 days a week in our leadoff morning note. And obviously those are featured every month in our macro scouting report. Also in our leadoff morning note and our macro scouting reports, we perform deep dives on liquidity. For example, we did a deep dive on US and global liquidity yesterday in the leadoff morning note. Every month in the macro scouting report, we do a deep dive on US and global liquidity, things like Treasury financing dynamics, U.S. Global central bank dynamics, everything you need to know about liquidity and ultimately how it's likely to impact asset markets on a medium-term time horizon. All that information is consistently included in every month's macro scouting report. So we help you understand what's happening with respect to liquidity and how it's going to impact asset markets daily in the leadoff morning note, weekly in the Around the Horn, and monthly in the macro scouting report. And then the deeper dives are in the leadoff morning note and the macro scouting report, unless we decide to do a deep dive in the Around the Horn, which we may, given how light of a week it is here on Saturday. So we'll wrap it up there. Darius Dale presenting our macro minute for Thursday, December 28th, 2023. Best of luck out there today. Catch you back here tomorrow, same time. Cheers.